Guys, welcome to setups. This first video is going to cover double tops, DT. First, let's go ahead and create our zone. All right. We of course going to create a uptrend where we get the first hit, and also a downtrend where market will go down to come right back up to give you the double hit to create the double top. Okay. First thing first, let's go ahead and identify an uptrend or create an uptrend market to see the double top, how it's created. All right. We're gonna start off by getting highs and lows. More specific, we're going to get higher highs, higher lows, higher highs, and higher lows. Okay. Now, market went to the zone. It hit the zone. That's the first hit. Okay, first hit. Now, we will be anticipating, waiting for when market come back to that same zone for a second hit for the possible sell. Now, we have market coming down like so. Okay, just like before, you was getting from higher highs and higher lows. Now you get in lower lows and lower highs. All right. All right. Now we have market buying back up. Okay. To go hit the zone the second time. Now, this is our second hit to the zone. Now we officially have a DT, a double top, a double hit to the resistant zone, right? Now, what we'll be looking for is price action to the zone. Now, if you are trading the H4, the month, let's say, okay, so if you are trading the monthly, and this is what happened in the monthly, and you wanted to take a trade based off the monthly setup, you have to understand you have to wait for a monthly price action. If you are trading the daily, and this is a daily setup, and you want to take it based off the daily itself, understand, wait for a daily price action. Okay? Wait for a daily price action to indicate that the market is going to fall back down. If you are trading the same thing, if you are trading the weekly, this is your weekly setup. You got a double top at the weekly time frame. You want to wait for a weekly price action, bearish price action for the sell. Now, if you are trading the H4 time frame, meaning you are pulling the trigger on the H4 itself, okay, you would wait for H4 price action to pull that trigger. Okay. Now this right here is just a double top on its own time frame, meaning it's a double top on the daily, it's a double top on the weekly, it's a double top on the monthly, it's a double top on the H4. Okay. Now all you will be waiting for is that price action in that specific time frame to pull that trigger. Okay. Now we're not dropping down to a lesser time frame to pull the trigger any earlier. Okay. Same time frame setup. All we have to do is identify one of the 6 selling price action, okay, to pull trigger, and then identify stop loss, okay, and then identify TP, okay. So market hit the zone twice, okay. Now we are waiting for a bearish price action. If this is the last candle that it give you, this is the last bullish candle it give you to the zone itself, you could get any one of the 6 selling price action. Either are we talking about a bearish engulfing, a tweezer top, a evening star, a bearish inside bar, harami, okay, a doji, more specifically a bearish doji. Okay, we could go with the dragonfly, which would look like a hammer upside down. So we're looking at the gravestone, okay, the gravestone price action, okay, and then of course we'll have the shooting star, okay. So shooting star, gravestone, okay. I like to put both of them on the same in the same category when I say a bearish pin bar. A bearish pin bar would be a gravestone or a shooting star, okay? So that's the first two. Tweezer top, okay? Bearish engulfing, bearish and sidebar, okay? And of course, we know we have the evening star, all right? Any one of these to sell the market itself, okay? So since the candle we have is bearish engulfing, as you can see, market engulfed the last bullish candle, okay, indicating a turnaround price. That means the market's turning around. You have price action telling you the market's going to sell, right? You will pull your trigger at the close of the candle, okay? You want to wait till that bearish candle close, because if you don't wait for that bearish candle to close, you are not waiting for market to tell you what it is that it's doing, so you could act accordingly. The goal is to be one with the market. If you anticipate the sale and you pull the trigger before the price action is completed, you are telling the market what to do, because that same candle could literally retrace and go back up, okay? Right there, you want to identify stop loss. I'm not telling you, or I'm not going to tell you to place a 10 pips, a 20 pips, or a 50 pips, or 100 pips stop loss. But one thing I am definitely going to tell you, place the stop loss where it needs to be, preferably at the last high. But if you choose to place it on top of the price action itself, okay, on top of the price action itself, please place it at least 5 to 10 pips on top of the price action, just in case when the next candle form, if it does retrace more than 50% or any stop loss of any sorts, you will be just fine, okay? Like so, stop loss on top, and then like so for the market to fall straight down, okay? That would be a perfect example of a double top. Now, again, this double top is being traded on that time frame that it is. Now, let's just say you was in the 1 hour and you get this double top in the 1 hour. Now you need an H1 price action, okay? If you was taking this, if you had this double top in the 30-minute time frame, right? Now you will need a 30-minute price action, okay? If you was looking at this on the 15-minute time frame, you will be looking for a 15-minute price action. If you was looking at this in the 5-minute, you will be looking for a 5-minute price action. I don't trade the 1 minute, but if you know what you are doing, the method is still the same. It doesn't change, okay? If you are in the 1 minute, this is a double top. You are looking for a 1 minute time frame price action, okay? Now, this is a double top without you dropping down. So that's one of the setups when you get in the market that you are looking for, okay? One of the setups, all right? For a market to come straight down, to go from one zone to the next zone, okay? You would have your TP at that next structure below, all right? Again, just a reminder, this trade is a 50-50 trade, meaning that market was originally in a uptrend, okay? Market was originally in an uptrend, and it gives you a double top. So if you were to take this trade, okay? If you were to take this trade, you are taking a 50-50 trade, all right? A double top, 1, 2. It says market is in the uptrend, you're taking a 50-50 trade because there's a possibility that it might break through to continue to the upside, all right? On the next video, I am going to show you how it would look like in the market, okay? But let's go ahead and pause this to continue forward. All right, let's continue with the setups you should be looking for. The first one we went over with is the double top. Now we are going to do another break and retest. Or we are going to be doing a break and retest. All right. Let's go ahead and identify our trend. So we have a downtrend while selling market, giving us lower lows and lower highs. All right, market come to the zone. Okay, we'll be waiting for market to break and retest that zone. Of course, waiting for market to give us a price action. All right, at this point, we do have a break. It's not complete. The reason why I say it's not complete because we have not got a retest. We haven't gotten a retest with a price action for the market to continue to sell, right? All right, now we have a break and retest for the continuation of the downtrend. Now, in this case, I'm going to show you two possible scenarios for a downtrend break and retest and how to read and react, okay? You're gonna hit two different type of market. This would be one where market is just selling, giving you lower lows and lower highs, as you can see, for break and retest, right? Now, if market come down and it start ranging like so, again, down there, that is a consolidation. But if you were to be in a monthly or weekly or daily, if you drop down to a lower time frame, like the H1 or the H4, the 30 minute, this right here will look more of a ranging instead of consolidation. Now, so in the time frame that you were trading this will look more consolidation until they start giving you consistent hit to specific zone for it to be a ranging market. Now, regardless of the type of market that you get, if you could box it in between two zones, okay, the best choice, the best option is to wait for a market to break out to take the sell or the buy. In this case, we are waiting for the sell, right? So boom, one hit, and then one more hit to the very top. Okay. Now let's wait for a market to break this low to anticipate our next sale, right? Boom. We have a break of the zone. Again, the break is not completed until we get an actual retest with a price action. Okay, because a lot of time, if you consider this as a breakage without a retest with price action, you get a next candle or market goes right back up to run up. This on the next higher time frame will be a wick or like a slippage, okay, where there's either was a minor zone in the area or the actual major zone was at that area. That's where market went to bounce out to continue to go up. It will be a false breakout, okay? All right, now we got market retesting the zone itself, right? We got the zone. Now, what we will be looking for, of course, would be price action for the market to continue down, right? Now, here we go. So again, just like we went over before. So the double top, of course, we was looking for seller price action. And now we do have the continuation of a downtrend with a break and retest. So we'll be looking for one of our 6 selling price actions, okay? One of the 6 selling price action for the market to fall, regardless of a bearish engulfing or tweezer top, any of the 2 bearish pen bars, either the gray stone or the shooting star, okay? And of course, you got the evening star, which consists of 3 candles. And then again, of course, you have the bearish inside bar. Now, in this case right here, we got a bearish engulfing. And for the top, we could have got any one of them. Let's see for morning star, okay? You got a morning star, okay? As you can see, the last bullish candle right here got engulfed, and same goes for the bottom one. The last bullish candle got engulfed. These will be your entry for the break and retest. Now, again, if this is on a monthly time frame, you will be waiting for the break and retest on the monthly time frame. Okay, and also it is better to have a monthly time frame price action for the bigger play. All right, vice versa. If this was on a weekly, you will wait for a weekly setup itself, meaning you want the market to come back and retest on a weekly zone, and a weekly price action will give you a bigger probability. It's a stronger setup, right? If this is a daily, you would wait for a daily retest of the market and then a daily price action candle to get the bigger play. Same goes for the H4. And also if you was looking at the H1 or the 30-minute itself, for whatever time frame you'll be trading, preferably monthly, weekly, daily, and H4. Nothing wrong with the H1 or the 30-minute, okay? But those time frames are a lot easier to trade. You have more freedom to pull triggers. You're not sitting at the chart for hours upon hours waiting for a price action or waiting for a setup, okay? Proper timing. Either, hey, look, man, by the end of this week, I'll have that weekly candle close for that price action, or by the end of the day, I'm anticipating this price action or a price action, depending on how the candle itself closed. If you're on the H4, 4 hours later, or in 4 hours, I will be anticipating my price action. Okay, simple as that. Let us continue. All right, let's go ahead and put that in here also. Continuation downtrend. All right, put a trend line, letting you know that this is a downtrend. No lower highs was broken. Okay, no lower highs was broken. Just like before, when you do pull your trigger, you put a stop loss where it belongs. Okay, when you do pull trigger, you put stop loss where it belongs. Preferably, I like to use the last high. Okay, but if you are placing stop loss on top of price action, I recommend you put it 5, 10 pips or above, 5 to 10 pips above, or 10 to 15 pips above. Okay, that way, just in case if you get a stop hunt to the upside, you have nothing to worry about. Okay. All right. Simple as that. Okay. Let's not make this hard. It is easy. All right. All you have to do is just wait for the market to give you that specific price action after the setup. All right. I'll see you in the next setup. All right. Let us continue. Let us continue with the setups that are possible when you are trading one pair, as far as double top, break and retest for a continuation trend. And this would be a break and retest after a DT. So where the market would give you a double top and then also give you a break and retest for the continuation of the sale. And break and retest is the #1 setup to pull triggers on, either for a buy or for a sell. So let's go ahead and we're gonna, of course, identify trend. So we got a market that's buying, okay, giving you higher highs and higher lows as it steps up. Market went to a zone, boom, market hit zone, right? So market's at resistant area, simple. Regardless of the time frame that you are trading, I repeat, regardless of the time frame that you are trading, all right? The setup is bigger when you wait for the setup to happen and to be completed in the time frame itself. again, from monthly, weekly, daily, H4, okay? Meaning if this is a monthly zone, market hit that zone, a break and retest off the zone, or it come to the same zone twice. Now you have a double top off that monthly, off the monthly itself. And then typically you would best wait for a price action off the monthly. Now you could trade the monthly first retest, but you want to trade also the monthly after the price action is given for the retest itself. All right. So market bounce off, going down, boom. We have a multiple hit to the downside where market's bouncing off a previous resistant, which is now a support. Okay. Market comes back up. Now we have a DT, right? We have a double top, right? But we are looking for a break and retest of the last higher low, okay, to give us a lower low and then a lower high, indicating market is at a turnaround point, because it's no longer giving you higher highs and higher lows. Now it's giving you lower lows and lower highs, okay? All right, so we already got the first hit, green light. Okay, again, you would wait for price action right there to pull your trigger. All right, again, zones at the bottom. A little retracement back up, boom. If you pay attention to the setups, that's one of the setups, again, I will show, where you have a nice little small head and shoulder, but you will be on top of the last high itself, okay? But really, the setup that we were waiting for is the retest of the last higher low, okay? Where all of these are higher lows, all right? All of these are higher lows because no higher lows have been broken to give you a lower low, right? Boom, look at that. Broke, all right? Again, when market breakthrough is not validated that it's a complete break until you get a retest to the zone. I repeat, it's not valid until you get a retest to the zone. And then with price action, of course, to indicate a market reversal, okay, for the downtrend. Boom, there goes our retest. That's what we've been waiting on. Within that area right there, we would, of course, anticipate price action for market to continue to the downside, okay? As you can see, market sell. Now, back to the top. First hit, second hit, right? DT. All right, market sold, okay? All you had to do was place your stop loss where it needs to be. Now, when market sold, it went to the same last higher low that it went, which it's a strong liquidity level, meaning there's multiple hit to that area. It's a strong zone, okay? So especially when market breaks that, you know it's going to be very strong for a continuation of the sell when it does give you a price action because it respected it multiple times, right? Boom. We have 1, 2, 3, 4 hit to the area. And then 5, all right, for the sell. That's the entry area right there, okay? Okay, that's your entry area for the sell, right? So you have 2 entries. You had the double top, okay? And you have the break and retest to the low side, okay? Again, you will wait for one of your bearish price action to pull this trigger, regardless of each one of them, each one it is, okay? One of the 6s to allow you to pull this trade, execute that very, very successfully. After pulling this trigger right here, you will place your stop loss at the last high, personally speaking, or on top of price action, the area where it is safe or comfortable, where you feel comfortable with risking that amount, okay? Right? And it will allow you to breathe without worrying about the market going back to hit your stop loss, okay? And that would be DT, okay? And of course, would break and retest, after, okay? So double top, and then after that, you got a break and retest, all right? This video might end up being too long, so I am gonna cut it right there, and then we'll continue on the next video so we can go over other setups that we are going to look for when we are trading that one pair. Every setup possibility. Some of them, of course, I will have to show you in the market because from the daily opening, midweek reversal, using Monday's high and low. Okay. And I'll show you again how to use the same method by just placing certain zone at a specific daily candle, just highlighting the daily high, daily low, and of course, daily 50%. Okay, every possibility that you would be looking for to take a trade. The market will always give you at least one of them. But if you have these setups available to you, you just got to go through your list to see which one. That way you won't be so fixated on the break and retest, okay? Or the double bottom itself or the double top, okay? There's more than one way to see a setup, okay? And there's more than one setup. All right, and let's see. I guess we could do a quick little, I'll show you guys that in the next video. Make things a lot easier. It will be too long. All right, see you guys on the next video where I'll go over double bottoms, okay, and a break and retest for the buy. And of course, followed by some setups and the actual chart.
Don't guess. Learn the real setups. Click the link in my bio and get the books now.